Hello, everyone. Welcome to AI Crypto Insights. Today is January 3rd, 2026, and we'll quickly review the market highlights in just a few minutes from an AI perspective. This program is for educational reference only and does not constitute any investment advice.
All right, let's just jump right in with the day's headline number. Get this, a massive $471 million flowed into Bitcoin spot ETFs just yesterday. That is a really powerful signal about where institutional money is heading as we kick off the new year.
This influx of capital tells a pretty compelling story, so let's break down where that money is actually going.
And this is where the story really gets interesting. You can see that while Ethereum ETFs pulled in a respectable 174 million, Bitcoin's inflow was nearly 3 times larger. What this tells us is that for the big money players, Bitcoin is still the front door to crypto. It's that trusted first step.
And no surprise here, the usual heavyweights are leading the pack. BlackRock's IBIT absolutely dominated with 287 million, with Fidelity coming in second. But here's the number that really stands out. Total assets in these ETFs now account for over 6.5% of Bitcoin's entire market cap. I mean, think about that. This isn't just some passing trend. We're talking about ETFs becoming a core fundamental piece of Bitcoin's market structure. That's a huge deal.
Okay, so now let's shift gears a bit. We've talked about capital flows, but what about actual on-chain performance? Because while institutional money is piling into Bitcoin, a whole different network is absolutely crushing it when it comes to usage. So the full year data for 2025 is in, and honestly, this might surprise a lot of people. Solana generated over $600 million in fee revenue. That means it officially beat out both the longtime king, Ethereum, and the transaction giant, Tron. This is a landmark achievement, right? It signals a massive shift in network usage and who's capturing that value.
And hey, this isn't just some financial wizardry with jacked up fees. No, this revenue is being driven by real people using the network. With over 1.05 million active addresses, Solana's growth is clearly being fueled by a huge surge in genuine network activity.
All right, time for a quick pivot. Let's do a rapid-fire round on some key projects making some pretty strategic moves out there.
First up, we've got a potentially massive governance shift coming from the DeFi blue chip, Aave. The founder is proposing that they share revenue that's generated outside of the main protocol, directly with Aave token holders. This could be a powerful new way to create value for the token and really get everyone's incentives lined up. Pretty interesting stuff.
Next, Helium is making a really pragmatic business call here. They basically looked at the data and said, hey, the market just doesn't care about our token buybacks. So instead of burning cash on a strategy that wasn't working, they're funneling that 3.4 million in monthly revenue right back into business development and growth. That's just a smart pivot, plain and simple.
And just a quick bit of good news for all you users out there. After a short and, let's be honest, kind of concerning absence, Trust Wallet's popular browser extension is back up on the Chrome Web Store and ready for download.
And last up in this round, little heads up from Binance. The exchange is slapping observation tags on several tokens, including Akala, DAR, and Flow. For traders, this is a clear warning sign that these assets are considered higher risk and more volatile, which basically puts these projects on notice. If things don't improve, delisting could be on the table.
Okay, speaking of risk, let's talk security and regulation. And what we have here is a classic case of good news, bad news.
Let's kick off with the good news, and wow, it's pretty striking. So get this, losses from crypto phishing scams absolutely plummeted in 2025. They dropped by a staggering 83%, going from nearly $500 million down to under 84 million. That is a huge win for user security, and it really shows that the industry's efforts to fight these scams are actually working.
But on the flip side, the regulatory hammer is still coming down hard. The whole saga with the JPX case in Hong Kong just keeps going, with a major influencer now facing even more money laundering charges. It's just a stark reminder, right? While the tech side of security is getting better, the legal and regulatory risks for anyone trying to play fast and loose are still incredibly high.
So you've got this flood of institutional money coming in on one side, but you've also got this persistent regulatory risk on the other. This leaves the one big question: where does the market possibly go from here? The problem? The experts are completely split on what happens next. All right, so in the bullish corner, we've got Grayscale's head of research. He sees this perfect storm brewing for Bitcoin. He's predicting that the mix of macro factors, things like a weaker US dollar and potential interest rate cuts from the Fed, is going to be the perfect cocktail to send Bitcoin to a new all-time high, and soon.
like within the next 6 months.
But in the other corner, you've got the on-chain data folks at Glassnode, and they're painting a much, much grimmer picture. They're arguing that capital flow is actually slowing down. Long-term holders are selling at a loss, and the market is showing all the classic signs of investor burnout. You know, the kind of stuff you see in a long, drawn-out bear market.
And that right there is the core conflict in the market today. You've got one camp, the bulls, looking at the big picture, the macro environment, the Fed, and they see a clear path to a new all-time high. Then you've got the other camp, the bears, looking at the on-chain data itself, and they're seeing nothing but weakness. Whales aren't buying, the market looks tired. It's a fundamental clash between big-picture optimism and what the blockchain is actually telling us.
So here's the AI analyst's conclusion. The market is caught in a serious tug-of-war between those bullish macro signals and the bearish on-chain data. This leaves us with the critical question of which force is going to win out. So which side do you think wins out? I'd love to know what you think, so drop your thoughts in the comments below. We'll see you in the next episode.